So quick welcome to everybody. Thanks for your time. It won't be too long, 45 minutes at the most, something like that, a bit of your lunchtime about the topic. Obviously, you know what it's about, but I'll give you a brief introduction in a second. Just by way of admin, I think, if you stay on mute, that's probably the best thing, just in case there's any background noise. So it just gives the presenter clarity and clear airwaves, essentially. If you have any questions throughout this presentation, I think the best thing to do, because there's quite a few people on it, there is a chat icon at the bottom of your screens, just drop me a quick note, type me a text, email, whatever that chat is, essentially. I'll receive that. And then at the end of the presentation, I can field those questions for you, because if you just do it as and when, it becomes a bit of a free-for-all. So it's just easier to get the presentation done. Any questions you have, just type them out to me and I'll address them at the end with Alison, and then you'll get your answers from there. But it won't be addressed till the end, as I say. Anything else you think of, by all means, after this, connect with Alison. If you've got any more questions, technical side of things, bit more detail, by all means, connect with her and take this offline and have further chats. You'll get some information out of it, but any more you need, just give her a chat. But yeah, any questions throughout this, just drop it down to me and then I'll answer that at the end. Other than that, look, let's get on with it. Obviously, Alison Horner, thank you so much. Thank you to everybody here, but a special thank you to Alison, who's taking her time out to do the presentation today. Alison's partner and head of indirect tax at MHA MacIntyre Hudson. And this particular presentation is international trade and tax and customs as it relates to international trade, I guess. So no further ado, Alison, welcome and thank you so much.
Thanks very much, Lawrence, and hello everybody. I'm going to attempt to share my screen, so hopefully this will work. It's not my strength, I have to say. Okay, can everybody see that okay?
No.
Oh no!
Try again, don't worry, we've had a couple of goes already, it's fine.
You've been very generous. We've had more than a couple of goes. I'm sorry about this, guys. I promise. It's all right.
If you need to grab your technical advisor.
Okay. Is that better?
That's working. Perfect.
Yeah, brilliant. Okay.
Thanks, Alison.
I just need to start from the beginning. Thanks for bearing with me. So what we're going to be talking about today is international trade, and particularly from a customs and VAT perspective. I will keep it as practical and commercial as I can without getting into too much technical detail. But let's have a look at some top 10 risks and issues for you to consider. So let's just refresh ourselves about if we're going to be importing goods into Great Britain from the European Union. So this is what it's going to look like. Say we've got a supplier over in Germany. He's going to produce a commercial invoice to come along with the goods. He's going to check whether he needs any export licenses to get the goods over to you. He's going to be named as the exporter on the EU export declaration. And then we're going to have an import declaration. That's going to depend on things like who the importer is, what the Incoterms are, etc. But based on that import, then there's going to be customs duty paid to clear those goods to get them to you. And then there's also going to be import VAT. And there are a couple of ways of dealing with that, which I'll go into. So that's what an import into GB looks like. Let's look about if we're exporting from GB into the EU. So if you're a supplier, you're going to also be producing this commercial invoice, which now takes on much more significance in the years after Brexit than it did before. We will also, as a GB trader, need to check whether we need an export license to get these goods out of the country. Certainly, I know of many businesses who've been caught out by this, where their products may have a dual use and do require an export license. As a result, there's going to be an export declaration. And again, we'd look to Incoterms to see who's named as the exporter. It may be if we're selling back to Germany, say, there may need to be a transit movement to get those goods through the territories that it moves through into Germany. There may be border checks to consider. There'll be an import declaration into Germany. Again, as with everything to do with imports, customs duty will be paid to clear those goods, and import VAT will also be paid at clearance.
Alison, sorry
yeah.
to interrupt. Your slides are not moving. You're stuck on the first one.
Oh no.
That's the one everyone can see. Sorry about this.
This is not the best, is it? Sorry. How about
I can see it. No, slide 4 now.
if I just do that? It's not
works.
what we wanted. It's not the slideshow, is it? But
we can still see it.
Sorry, everybody. I'm much better at VAT and customs than I am at PowerPoint slide sharing, I promise.
I think that works fine.
Okay.
Thanks, Alison.
Thank you. Okay, so we looked at what an import was, just looked at an export, and I was exporting goods into Germany. So that customs duty for all imports, no matter if it's into the UK, into the EU, customs duty is always going to be paid to clear those goods. It might be deferred, but it's going to be paid. Import VAT, it varies throughout Europe. So some countries, such as say France and Ireland, have postponed VAT accounting, which is similar to what we have in the UK. But some countries don't. So, for example, Germany doesn't. So import VAT would need to be paid in order to clear those goods. So that was just a refresher on what an import and an export looks like. Let's just go through a top 10. So first of all, accounting for and reclaiming import VAT into the UK. So there are two ways of doing that. On import, so that's where if you have your own deferment account, you would pay your import VAT and customs duty via your own deferment account, or you may use your agent's deferment account, in which case they'll enter it via their deferment account and charge it on to you. For both of those import VATs where you do the declaration up front, then you're going to need the C79 import VAT certificate in order to recover that VAT on your VAT return. With Brexit, the UK government introduced postponed VAT accounting, which had a few teething problems at the beginning, but works well now. And what that is rather than you having to pay via your deferment account or to your agent, and obviously with an agent, you'll get some charges that goes with that. You can ask your agent to use postponed VAT accounting, which means that it won't be charged when the goods come in. It will instead be accounted for on your VAT return. And to do this, if you're not using it already, the process is as follows. You have to tell your agent to use it. And I know that can be a difficulty sometimes, particularly if you have if you've got, say, a global company and you're the UK sub, then it might be that the head office owns that relationship, and it can be difficult to instruct an agent to do it, but that's all that needs to happen. And it's a case of finding the right person to tell. Once they've been told they should use postponed VAT accounting, you then need to have sign up to postponed VAT accounting on your government gateway account. It's not an application, it's just a sign in. And then your postponed VAT accounting statements will go to that. They only last 6 months. So you need to keep on top of them and save them as your evidence that the goods have been imported. Also, to use it, you need to sign into the new CDS system, Customs Declaration Service, and that's all being beefed up as well. But everything will be able to be found online. So it's taken a few years, but things should be much more digitalised and easy to get hold of these days. So those are the ways of recovering import VAT, the mechanisms, the processes, and the documentation. If we move on to the next slide, which now, oh, there it is, apologies. Incoterms. We're going to talk about Incoterms and what they are. Incoterms 2020 was a big change, and it's these that we should be looking to when we are selling, importing and exporting. The issues to do with who's responsible and the VAT side of things always come at either extreme of that table, usually Ex Works, FCA, DAP, my favourite, delivered at place, and DDP, which obviously causes all the problems and is the one that we always have discussions about. So these have taken on much more significance, and it's worth saying that HMRC look at them very closely these days. So what are they? And apologies, if you're all dealing with international trade, which I'm sure you will be, then apologies for probably stating what is very obvious to you. They are very important, and what we're finding is that, particularly in Europe, goods coming over from Europe into the UK, there isn't as much knowledge, both maybe UK agents and also the agents over in Europe, to really understand the significance of them, because those Incoterms really do specify who's obliged as the buyer or the seller, who's going to be responsible for things like transportation, where does the risk transfer, who's going to bear all those costs for transport, packaging, etc. And they may all be very well-known commercial requirements, but where the issue arises is when we have, say, goods coming into the UK under DDP or vice versa into Europe, DDP terms, delivered duty paid terms that have been agreed, but then the wrong person is declared. Because as far as HMRC are concerned, that is now, if it's DDP but your customer has been declared, then that customer, as far as customs are concerned, is now responsible for all those import and customs duty obligations. And there are issues relating to VAT recovery which make it even worse. We've seen very good examples, particularly goods coming over from Italy, where the DDP term has been misused. I've seen where, say, Amazon have been named as the importer, and if you work with Amazon, you'll know that they are very, very rigorous about ensuring that you deliver duty paid, and they do not want those obligations bestowed upon them. So I've seen them sending out, where it's been done incorrectly, legal sort of letters to say it must never happen again. So how are they used? Well, certainly on the invoicing and the commercial invoices, the term should be stated. And if we're saying delivered at place, DAP, then we need to name the place that it's going to be delivered to, because that then has the seller delivering it and taking responsibility for the goods to be delivered to that address. So that's an important point to bear in mind. The same with Ex Works, it would be where the goods are collected from. So just going to show you three particular Incoterms here. So we've got Ex Works, which you'll all be familiar with, and if you're buying from Germany, then I think Germany is particularly fond of Ex Works terms. So Ex Works, the seller. So I'm a seller in the UK. I'm going to sell to somebody in Ireland, and they're going to pick up from my premises. Then I'm going to name the premises that they're going to pick it up from. I'm not responsible for anything once it's been collected, but equally, and where the VAT risk comes in, I'm not responsible for arranging that export declaration. So as you will know, for VAT purposes, the sale of an export is 0 rated for UK VAT purposes. But a nice, easy assessment for HMRC, if you have not got proof that the goods have left the country, that would result in an assessment to you. So it's important, if you sell Ex Works, that you get proof that the goods have left the country from your customer, because if you don't get it, customs will certainly be looking, and it's a big assessment coming your way that is not going to be easily overturned. So maybe if Ex Works is not the best, then free carrier, FCA, terms might work for you. It means that you're in control of the export licensing, so that's under your control. You're also responsible for the export declaration. So you're not, that VAT risk is going to go away for sure, but obviously there's going to be additional costs that you incur, which would need to be factored into your pricing structure. So if we then move on to delivered at place, which is always the one that, if it's possible to arrange, if you're selling to Europe as an export, then to avoid sort of VAT implications, then if you can agree delivered at place where you transport the goods to the customer's premises, then that's great. All the risk and the insurance and the transfer of goods falls to you, but you don't get the import formalities, the customs duty and import VAT that comes with it. Just a little nod to export licenses, because I think this is an area where obviously we used to have to worry about it before Brexit, but now it's something that you should consider. This is where you would go to. It's Spire, and it allows you to look to see whether or not you require a license. If you don't have an export license, but you should have done, then that can result in, as we all know from if you can remember that far back, Churchill Matrix issues, then criminal proceedings. Another thing that I've seen happen, if you have customs special procedures licenses, such as AEO or maybe inward processing, stuff that needs you to be very compliant, this can really trip you up if you don't have it and you should have done, and can result in you losing those special systems. Incorrect tariff classification. We all know that that's something now, if we just traded in the EU before, we didn't have to worry about it. But it is one of the main areas where if the wrong code is used and it's obviously underneath the value that it should have been, then you're going to get a customs debt. Customs duty is obviously not recoverable, so it's going to affect your profitability. So it's good that within your business you've got procedures in place to check that you're using the right codes. An example would be that I've seen recently where an item's been classified as a medical device at 0% duty, but actually it isn't, and it should be at 8% duty. And that's going to be a debt that can't be avoided and will need to be paid over to customs plus penalties. Coming into number 7, understanding overseas VAT obligations. That's one that's particularly close to my heart, and I deal with an awful lot. And how does it arise? It's usually when your customer says, I don't want anything to do with this import. I want you to take responsibility for everything, please. And who can blame them? Because, you know, a customs import formalities and procedures bring with them a lot of penalties and responsibilities. Just the licensing alone, and, you know, taking responsibility for getting things correct as they come into either the UK or into Europe. So commercially, the customer wants you to deliver duty paid. So what does that mean? If it means that I'm going to sell from the UK and I'm going to deliver into Germany or anywhere in Europe, then if I am responsible for the import formalities into that country, then I have an obligation to register for VAT. It may actually be that in some countries you don't need to. For example, Belgium. If you are importing via Belgium, there's not necessarily a responsibility, but I do think that they will follow the French system. France changed their system in the last year or so to ensure that anybody who was importing into France had a compulsory obligation to register for VAT as a non-established taxable person. So, but at the moment, Belgium's a little bit different. But for all those other countries, if you take it that DDP means that if you're going to import into a particular country and then sell to your customer in that country, you're likely to have a VAT registration liability. What can sometimes happen is that it takes a while for this to be caught up with. It may be that, you know, the customer's being named as the importer. That might come back to bite you because the customer doesn't realise it. And has been, say, using postponed VAT accounting without realising it because it nets down to zero. People may not be aware of it. Or it may be that you're being charged back the VAT and took the hit for a while. You didn't have any customs duty, so the goods were manufactured in the UK, so there was no customs duty. But that VAT leakage can't continue forever. Another example of VAT leakage is where you, as the trader, get charged a load of import VAT, but you think that you can recover it via the overseas VAT refund service. You can only do that, and I'll come on to that, if you don't have a liability to be registered. So if you do it that way, you might then find that they refuse that and say you should be registered for VAT in this country. So please, so the message is DDP means you're likely to have to register for VAT. If you're buying and selling in the EU, so a very typical example for UK businesses, if they've got the UK Ireland market and say they've got a German head office, then it may be that it's buy from head office and dispatch directly to Southern Ireland rather than doing all the rigmarole of coming into the UK and out of the UK. So that's fine, you can do that, but it does mean that you have to be registered for that in Europe. And that's not as bad as it sounds, because it's a VAT registration. It's not a legal entity, it's just getting a VAT registration. And that VAT registration can then also help you. If you use triangulation before, you know, where you have 3 different registration numbers in 3 different countries, you could still use that VAT registration that you're forced to have for other triangular trade in Europe. So don't be put off by that. It's not as difficult as it sounds. It may help you with other European markets. A lot of imports are via France or the Netherlands. They're well set up for it. France certainly wasn't. It was a bit of a nightmare. You used to have to claim that French import VAT back via the 13th directive, which took a long time. And I think they saw how difficult it was. And commercially speaking, it was better that they reformed what they were doing. So in France now, there's this compulsory liability to register for VAT if you are named as the importer into France. But what that means is that you can then sell to your French businesses. They have a domestic reverse charge. So if you just imported into France and sold to business customers, then you wouldn't really have any French VAT to charge, but you'd have a statistical VAT return to deal with. You can also then use it to then sell on to the rest of Europe. It avoids the regime 42, which was being used, whereby goods could transit through France and out to the rest of Europe. It would still mean that you had to register for VAT, and it would put a lot of emphasis on your EU customers being responsible for the VAT. So I'd say now, if you're importing via France, that is not required. It's a French VAT registration that's required with postponed VAT accounting. In the Netherlands, they're very well set up, as you'd expect, for imports, and they use Article 23, which is import VAT deferment licenses. You'd have to appoint a representative to do that for you. So they are ways that you still have to register for that, but things are simplified to take away that cost of the import VAT to you and to move things through speedily. Please be aware that the rules are not the same throughout Europe. Some countries have got postponed VAT accounting, such as France, Ireland, some of the Nordics. Some people don't, some countries don't have it, notably countries like Germany. Some countries require you to appoint a fiscal representative. Some countries have the domestic reverse charge, so that once you have to register, you don't actually physically charge VAT, and others don't. So I'd like to say it was simple and harmonious, but it isn't. Just remember though, if it's DDP or you're buying and selling in Europe, then you're going to need a registration. Some of our clients longer term have looked at, do I need to now have a structure in place in a country? We are part of Baker Tilly. We have lots of Going Global guides if anybody wants to look at what would work best for them. Often you can get away with a VAT registration for your UK subsidiary in Europe. Setting up a local branch, I find with branches, I don't know whether you found the same, that it sounds good in principle, but you still have to really show that you are established, and more so that you've got a fixed establishment, permanent establishment branch structure, and you've got feet on the ground. And it's almost that you need to do more to prove that than you would with a local subsidiary. But I know that people are thinking medium, long term, and particularly with things like CE markings, it may be that you do require an overseas entity. Again, you'd need a VAT registration, more than likely. You'd be pleased to know we're nearly halfway. So number 6, nice and straightforward. One thing that we find is always catching people out is that there's not enough information on those commercial invoices. They take on much more of a significant role these days because they're going to be the document that's used for import and export. So you must make sure you've got the right commodity codes, the valuations right, the Incoterms are there, that the right importer has been named, and that you've got things like the EORI numbers on there. So all those things need to be built into it. Otherwise, it's not going to clear customs. On to number 5. A big issue these days is the origin of goods. Part of the trade agreement was all about allowing 0% duty on things that qualified, that they had a qualifying origin. So we see a lot of clothing and so, say shoe imports coming into the UK from, say, Italy as an example. They need to be proved. They have a high tariff that goes with them if they're not EU goods. It's typically 8, 10, 12% duty. So that is a risk area where you have to be able to prove that you've met the conditions of it. I won't go into those details, they're very complex, but if they're not solely manufactured, then you need to have certain levels of processing and changing of the tariff headings to meet EU or UK origin. And if you can't meet that and you can't evidence it, then that's going to be quite a hefty duty bill that's coming your way if you can't. An example I have for you there is, again, the wrong DDP importer being named on Italy into the UK, and claimed that it was EU origin and 0% duty, but that could not be evidence because actually the goods had come via the Far East into Europe and then onto the UK. So there's going to be a big bill there for somebody to pay, and unfortunately the wrong importer was named in this case. So that's where the commercial sort of unwinding and the importance of the Incoterms and origin comes. That's where it comes to bite you when that big assessment is raised. On to number 4, customs valuation. Now, we've had many, Brexit happened a few years ago now, but we're really starting to see these issues coming to bear with HMRC doing their inspections, looking closely at them. Particularly if you've got, transfer pricing, if you've got related parties, that can be a big headache issue where, say, for example, you've got a price coming over, it doesn't factor in all the transport costs, which would be subject to duty. It doesn't bring into being sort of the marketing and sales commissions and stuff, which are then adjusted at the end of the year or quarterly to take into account transfer price and sort of dealing with all the profit around the group. I've seen a very large assessment really from customs based on transfer pricing, which we were able to overturn, but a lot of work had to go in to prove that this was a proper transfer price based on a method that HMRC approved of. So one to look out for if you have a international group structure, because HMRC are looking at those. On to number 3, reclaiming overseas import VAT. Obviously, these days you might be buying stuff in country but not selling it for whatever reason. You may just be going over because you're in business or you're doing a big project over there and incurring expenses. How do you get it back, or does it just get lost? We did before Brexit, before Brexit, we were able to use the portal to claim our European VAT. That is no longer available to us. We need to now do a 13th directive claim in Europe. We can only use this if we don't have an obligation to be VAT registered, but that hasn't changed to what it was before. There's a bit of a step up from that old way of claiming back VAT. Nowadays, because we're outside Europe, we might need to appoint a fiscal rep in some countries, which is a cost to the business. You need to get a certificate to prove that you are VAT registered in the UK. That's a VAT 66 certificate from HMRC. You have to be able to provide all the invoices to that country. You can't use the portal, so that means posting lots of paper in most cases. And they're all calendar year claims with the 30th of June deadline. So for anything in 2022, you'd need to be claiming that back by the 30th of June this year. A couple more points to raise with you. Number 2 is all about now focusing on making sure your declarations are correct and that you are a compliant customs trader for your imports. And this will mean making sure you've got in place processes to check your commodity codes, to check a sample of your declarations. This here is an example of MSS data, which can be obtained from HMRC, which will show you all the imports that have been made in your name. So there are, I think now is the time, if it hasn't already been happening, that for your UK imports, and if you're registered for that in Europe and importing yourself into Europe, that you are compliant with all the customs requirements, because again, they're looking at all of these visits now, and with customs duty comes quite significant penalties. My final point in the top 10 issues to look out for is all about the import VAT, going back to number 1. To claim back import VAT, either on your postponed VAT accounting statement or via a C79 or overseas where you're registered for VAT, you need to be the owner of the goods. You need to be able to prove that as the importer of record who's incurring that import VAT, you own those goods. So let's give an example. I'm leasing a helicopter from an Italian company. I'm going to be bringing that into this country and I'm going to use it in my business. I'm going to import it in. Well, the big problem there is a high value asset. I don't own the goods. They're not my goods. I cannot prove that I own them. Therefore, I am not entitled to claim back that import VAT. Same applies for all leased goods. Therefore, that the company that's leasing them to me needs to be named as the importer and claim that VAT back via the 13th VAT directive that we have in the UK. Same applies for any processing and repairs of goods that are done in this country. You don't own the goods, they belong to somebody else. You cannot claim back that import VAT. Instead, you need to be looking at a process such as inward processing relief, which is being used an awful lot now to be able to deal with this very particular issue. So please bear that one particular rule in mind. We've already seen HMRC challenging a number of clients on the basis of, do you own the goods? Are they really your goods when you import them? And that is borne out by that example I gave you at the beginning, which is where the customer is wrongly named in a DDP import as the importer. They will be the ones that get all the problems, which is not going to be good for your commercial relationship. My final slide, obviously for your accounts and your businesses, think about the risks and whether you need to make any provisions in your accounts. Is your customs duty, are you happy that if you've got an international business and you're exporting to Europe and registered, say, in various countries, are you quite happy when you're signing off or that your accounts are being done that that if you've got a big VAT reclaim that you think you're going to get back, are you certain that you will get it back, or is it in doubt? Have you got the right origin things, or could there be a big customs duty debt coming your way? So I think now is the time that businesses need to make sure that their staff are trained, or that you have people like ourselves to come and deal with your compliance or for you, make sure you've got the processes in place and the policies. I think be very aware of VAT leakage overseas, because we're seeing it too often where where companies are bearing the chargeback of import VAT with not realising that it's just leaking away, and if they were registered for that, then they would be recovering it. And make sure that you've got those audit procedures in place now for your customs declarations, because certainly in the UK, customs are looking to audit and catching businesses out, understandably so. It's a complex area, and the origin rules, that's a complex area which really needs to be considered in detail. Thank you very much for bearing with me on my dreadful slide skills, and I'll hand back.
Alison, thanks so much. That worked well. No issues, I don't think, to be honest, so I could see them clearly. In terms of questions, I think you've obviously done a detailed presentation. There are no questions, so everybody are now experts because of you. So I don't know whether you want to charge them extra for that. But yeah, no questions as far as I know. Nobody sent me anything. But just as a quick, 1 minute, because we're almost at time anyway. But anybody got any specific questions? I mean, by all means, get yourself on mute and have a shout out, and she can answer them. Other than that, if you think of anything afterwards, then you can get in touch with Alison before. But any questions here or not from anybody?
Hello, can I shout out? I've just popped on the chat whether you've got any particular advice on returns of goods to the EU. So we're an importer of goods from Spain, and we incorrectly received some goods from Spain, and it turns out it appears to be a total nightmare to try and get them back to Spain. I don't know if you've got any particular advice on how we ought to be dealing with returns.
Have you used return goods relief?
No, but because in Spain they're exporting the goods and filling in their export detail, they need to make some declarations to bring them back in. Yes, I believe it's a group company; they don't have the expertise for doing that. So it's kind of that complication of how it was actually cheaper for us to destroy the goods than return them, which was
I know it's not right, is it? Return goods relief is available throughout Europe, so they should be able to use return goods relief. So that I know they've exported it, but they'll import them back in, and they should be able to use that to ensure that the goods get back in and they get relief from that import.
I'll take a look at it. Yeah.
I can certainly get my customs guy to just send you over some stuff via Lawrence that he can pass on to you.
That'd be lovely, thank you.
Is it working okay for you though on the UK side?
Yes.
Yeah, there's no question on the Spain side, yeah, they should be able to use that.
Yeah. Okay, lovely.
Thanks, Alison. Anybody else got anything else?
A quick one, if that's all right. It's related to export of services.
Oh yeah.
And in particular, export of services outside the EU.
Okay.
From what I can understand, the onus is on the exporter to determine if it's business to business or business to customer. Yes. Most of the rules talk about if it's in the EU, having a VAT number shows it's business to business. But when you're exporting to a jurisdiction which doesn't have VAT, such as the Caribbean or the US, how much do you need to do? What do you need to do to identify whether it's business or customer?
First of all, what type of service is it? Is it electronically supplied?
No, it's administration.
Okay. I would be. First of all, as we now know, for businesses, obviously the VAT number is the most crucial thing. If they are in business and they've got a business name, then that should be enough. It's not an obligation to have the VAT number; it just helps. Since Brexit, it's really the electronically supplied services where you need to be able to prove it's an individual or a customer that really do trip people up. But I would have thought with admin services, they would normally be, if they were outside of Europe previously, they would have been outside the scope anyway.
Yeah.
So I think if you've got a business name, then that should be enough. Have you had problems with HMRC on that?
No, but I've got a few offices in different places, and the interpretation of the rules seems to be different in each location. Greece, UK, France all seem to have a slightly different approach to it.
I
don't have an issue yet. I'm trying to see if I've got
I think, I mean, we shouldn't really these days. The VAT registration number still helps, obviously. If there's a customer number, then great. But I think the name itself should be sufficient to allow us to determine it's a business.
Thank you very much. Thank you.
Yeah, thank you. Mark McCormack, did you have your hand up? Sorry.
Yeah, I did. Yeah, sorry. I was just going to. Hi, Alison.
Hi, Mark.
Yeah, we know each other. So just the comment on the MSS data, which I think is really, really useful if people are importing. We got caught out with samples because stuff was coming in and suppliers were using a sample code, which meant there was no duty on the product when they came into the UK. But then you're supposed to keep an inventory of these samples. Because otherwise, I think people were abusing the system, bringing in 100 leather jackets as samples, for instance, which is quite what you see on clothing, why they have the tags cut out. And then flogging them in car boot sales, etc. So to stop that kind of abuse, they want this inventory system so you can account for those samples. We didn't have that system in place, so we had an inspection, and it didn't cost us much money, but after that, we got the MSS data because couriers were using wrong CPC codes, and it allows you to check that. It's 240 quid a year, so it's money worth spent.
I think it's it's really, really useful, and agree with samples. They are hot on that, and they would expect it to be marked as a sample. As you said, with clothing, I've seen with toothpaste of all things, where it's, you'd expect it to be in a smaller box and name and obvious as a sample, but that MSS data is really useful. We had a big assessment recently for a client, because HMRC was saying, well, it's sold ex works from Germany, so you're not the importer, it's your customer who's the importer, and we were able to show that we were, and that we'd got all the MSS data together, which helps. And I think as well, MSS data, as a result of those CDS changes, it's meant to be automatically going to be on there in the future. Not sure which date it's coming in, so that cost should go away, and it would be very useful to me to have. Thanks, Mark.
Excellent. Anybody else? Last orders. We're pretty much.
You never thought it could be so interesting, did you?
That's brilliant. I mean, I'm an expert. Well, not an expert now, but no. It seems. I think actually that the more you say things, the more questions there are. So that means there's a lot more of a conversation to be had, I think. So. And it's certainly the area that most FDs tend to either shy away from, don't have a particular interest in, or pass it off to somebody else. So they're not real experts in it. So these kind of talks from you are really useful, I think, to get the conversations going. And things are cropping up all the time. So anybody else got any issues at any time, by all means, just have a chat with Alison. She'll be able to help you through these, because these things crop up at any time, and when you're not looking, especially, I think. So yeah, I mean, the slides are available. If you get in touch with either myself or Alison, by all means, contact her on LinkedIn or directly through MHA. Anything you need. I hope it's been useful today, but obviously more questions, I think, and just approach her. If you need anything else from me in terms of slides, by all means, come to me. But Alison's got them, so it's probably better going direct. But I'm available as well. But Alison, thank you so much for today's presentation. Really appreciate it. Everybody for turning up. Hope you found it useful, and thank you very much. That's it. And for everybody else, have a great rest of the day. Thank you so much.